whole lot of panic going on out there. A lot of people saying this looks really bad for the S&P 500, but given into context with everything that's been going on here, you just have a series of higher highs and higher lows. So it's not really panicky just yet, but there are some things that aren't looking great. I had thought that this is getting into an area of concern, and I'll draw that out for you here. Now, the way that I've been looking at this, there's always been three waves there. I was looking for these three waves to match these three waves. And then this is repeating up here, if that is indeed the case. So this is an area that I would be watching because it's matching this leg in log scale. I currently have it in linear scale. So I didn't switch it over, but I will. But anyway, this leg matching this leg, it's coming into an interest zone where I would look for a potential completion of this entire move up. And this thing's been going up for 2 years, and you just have a series of higher highs and higher lows throughout. Fairly strong rally on declining volume. I mean, the volume's not really there. You have the volume at the lows, which means as the price is moving up, each sell-off gets met with like liquidations. Especially this one up here. This one got a lot of liquidations. And now this one right here, we got a nice large spike in volume. So there's definitely selling there, and it was on the Federal Reserve meeting today. So does that really matter? Is that the reason why the market sold off? No, the reason the market sold off is because there's more sellers than there are buyers. And this could just be a liquidation event again. The only difference is this actually closed a slightly lower low on the daily. So while you have higher highs and higher lows throughout this rally, you now have a slightly lower low daily candle close. We can zoom right into that. So this candle did close ever so slightly lower. So what I would potentially think would happen is the market comes back up to check that level. If you do want to try to sell this thing or short it, your stop loss goes at the high. But it looks like there's a lot of liquidity up there. By the way that this thing kind of sold down, now there's a lot of stop losses right there. So the market may come up there and grab those and then reverse. Maybe it maintains the lower low, lower high closes on a closing basis. So maybe you wick up there and grab that, but you close a lower low. That would be a great stop loss if the market decides to reverse there. Now, having the news come out on the FOMC, Jerome Powell speaking, I don't know if I trust it. Could just be a nice market sell-off. We'll see how the week ends. I mean, the weekly is still higher highs, higher lows. And the weekly is what kind of determines trend for me. So I'm zooming in here. Still on the daily chart, but zooming in on price action, getting real close here. You can see how much lower the daily candle closed. It didn't close below these wicks. I think if it closed below those wicks, I'd be a little more inclined to say, yeah, you're going to get a lower high. But because we're still maintaining daily closures above that wick, yeah, it might just be a fake out. So we'll see the way tomorrow starts trading. There is a potential for this leg right here to match this leg right here. They look identical. So if that is actually the case, you should have this leg repeating up from here. I can get you an invalidation on that. If that does indeed match, I'll measure it from there to there. Yep, so far it almost touched a 1-to-1. So maybe during New York session, you might have this wick down, grab the stop losses, and then take it back up. Invalidation for the trade setup long is at 5668. Below there, it would look really bad. And that would be the the idea of continued sell-off here. It'll take all this liquidity. You might be matching this leg or total reversal. I think you'd be hard pressed to say you're going to make new highs if you keep going lower. But yeah, right here, this can just be some kind of 1, 2, 3, 4, and then you go up for wave 5, and this leg repeating would get you a target somewhere around 6,400, 6,500. So we'll see if the market decides to go crazy into the end of the year here. Seeing in all the feeds that I kind of look at is it's all about Jerome Powell crash the markets and whatever he says goes and stuff like that. But I don't subscribe to that. So we'll see if it has any merit. So far, the weekly is still in an uptrend. As soon as the weekly closes a lower low, that would have to be below this low here at 57.34. $5,700. Close below that on a weekly, I would start calling tops. If you close this week anywhere down in this area, I'd say you have potential for a top. It's a lower probability, much higher probability if you take out that low and close below it. Then you have the potential to start a downtrend. But there's only a slight possibility that this would be your swing low on a weekly. It's not really a swing though, but if you do close below that, it gives you a lower probability sell setup up there if you want to take it. To prove my point on Jerome Powell speaking, whether or not it has any merit, I have to look no further than the U.S. 10-year bond yield. The interest rates are supposed to be getting pushed down, but the bond yields, they're moving up. Their rates are moving up, so they're giving the middle finger to Jerome Powell and saying, no, we're not taking lower rates. These rates are going up. And now it's kind of breaking out here. You're not necessarily closing a higher swing high on like a weekly, but this daily is in an uptrend, and it could continue way higher. So what does that mean for markets? If this bond yield goes up from here like a bull flag breakout, you have some high targets up to 6-7%. And if the percentages on these bond yields goes up high, the yield is so high that means that the actual bonds are getting sold off. And the more these bonds get sold off, the more debt is devalued, and debt becomes the problem, and you have a potential sovereign debt crisis going on. To learn more about that, I'd suggest looking into the dollar milkshake theory from Brent Johnson. But this kind of speaks to that, is the U.S. government bond yields moving up, suggesting that the bonds are getting sold off. Sold off into what? Seemingly into the U.S. dollar index. This is the DXY getting stronger here, as we can see. This was your liquidity grab, and now you're breaking out above that. The only thing that I would see stopping it at all is this 2-month order block sitting at 108.785. 108.785. That's the only thing that I see in its way. It's a previous resistance area, fair value gap right there. This is the area that I would look for a reversal if one is going to happen at all. But you're currently in an uptrend here. You have higher high and higher lows. And now you're breaking out for higher highs. This looks like it speaks to rapid acceleration to the upside. If it wasn't going to accelerate from the upside, it would have stopped at this liquidity grab. That's all you need to stop everybody out and reverse from there. This is looking like it wants to continue, just from a price action standpoint. If it doesn't want to continue, you have to close back below this previous swing low, but this is looking good for upside. So the dollar going up, potential S&P 500 sort of breaking down-ish, but not really. But the bond yields are moving up. So we're entering into banana zone, but a different kind of banana zone. it's not a good banana zone. It's the markets are apparently going to get very discombobulated from what it looks like. You have your dollar moving up. You have assets moving up. I mean, this whole rally in the DXY, you have the S&P 500 moving up, Bitcoin moving up, gold moving up. Now they've all kind of paused, and the dollar's kind of breaking higher now. This, though, I do believe is other currencies around the world kind of failing. May not be risking deflation just yet. It looks like the other currencies are collapsing, and the bonds are getting sold off everywhere to prop up their currencies, and it's failing, and those currencies are moving down. A major component of the DXY, not the main component, but a major one, is the US dollar Japanese yen. And this, I'm seeing this wanting to scream higher. So it seems like Japan's currency is going to have a hard time. And real simply here, you just have three waves there. And you have this. Out of there, you have this leg matching this leg very nicely. The same pullback, same pullback. I would say this is going to climb up thusly, giving the DXY room to run without the United States necessarily getting into any problems with the indices, with the S&P 500, Dow Jones. They may not get into any trouble, but they may. They may have topped, they may go sideways. But what this may really benefit is gold and Bitcoin, and maybe all crypto altogether and stuff. If you have currencies that are kind of collapsing versus the dollar, their purchasing power has to run somewhere, and it'll run to the most liquid assets in the world. And currently, the most liquid asset in the world for large institutions is the US dollar and US treasuries. And they don't seem to want US treasuries. So they're flooding into the dollar, hence the DXY, and potentially gold and Bitcoin. Those may be beneficiaries of it. Currently, it's just the US dollar, like this past week, that has been a beneficiary. But when the dollar gets too expensive, then it'll run to other assets, and depending on how quickly or what types of assets get sold off around the world, it may go into gold and Bitcoin. Another currency I was looking at today was the South Korean won versus the dollar, uh, brought to me by Francis Hunt, the market sniper. And he was talking about this breakout, and he's got much higher targets, somewhere around 2,000. And this is just another one. It's breaking out. The dollar's breaking out versus that currency, and you're in a series of higher highs and higher lows, suggesting that DXY goes up. In Euro USD, this one is a chart that looks to be breaking down. That looks to be breaking down here. This can be an ABC, similar to the DXY, just upside down. But there is a pattern here that says that this can go down substantially versus the dollar. Just looking at it very simply, you have an ABC there. You got this leg here doing that. That. And then what followed was a large move like that. So that could be what's going on with the Euro USD. Generally, the way that I usually see things, not to say they have to play out, but if this is a reaccumulation pattern, this would sweep the lows and close back inside here. So a weekly candle close back above 108. I would say this is a place to put a stop loss and expect this liquidity to be taken. Similarly, the US dollar would be doing the same thing on the DXY. But until this Euro USD climbs back up to the 108 and holds support above there, this is not a reaccumulation. This is a little last point of supply before rolling down. So we'll let the charts tell you what they're doing when they're doing it. So this always, as always, it can go either way. Just let the charts tell you which way it's going. Currently, you're closing a lower low here. So now it needs to make a series of uptrends if it wants to go up. If not, that pattern that I drew out plays out. Switch it over to gold on the weekly. This does not look done to me. This consolidation right here, this little contracting pattern right there, I think that's what's repeating up here. Then you just have an ABC contracting pattern match for another push up. Just drop I'm talking about here. Contraction, contraction. Matching this leg with that leg. Then I suspect we're going to move up. Probably somewhere around 3,000. 2,900. Maybe it'll crack the 3,000, get some headlines. That would actually make sense moving into January. And then this pattern would repeat up here before resumption of more upside. I kind of see similar for Bitcoin. So gold and Bitcoin are doing that. And you have bond yields going up, suggesting that the bonds are getting sold off. You're having gold and the dollar rallying at the same time. And that is dollar milkshake theory. That is what leads to a sovereign debt crisis. All the puzzle pieces are kind of coming together the way that Brent Johnson kind of mentioned them before. And scary times. This leads to really, really bad things. Bad things all around the world, but the United States will kind of deal with that last. I think the rest of the world is going to be punished first before the United States takes it. Bringing it down to the NASDAQ here. The NASDAQ actually looks like a sharper sell-off, and it did close beyond these lows. You had a gap that you filled right there, so this can be a gap fill and you proceed upward, but you did close a lower low. Your sell setup is right there at 21,887 on an order block. Good luck getting above that. If you do get above that, great. Don't have a matching leg that I would necessarily be looking at. Maybe this leg matches this, but it doesn't look great. It's okay. Your invalidation may have already been hit, though. Let's just measure it to make sure. And measure this leg. Project from the high. Not hit yet. You're actually at the best opportunity for a buy setup. Your invalidation for upside is 20,995. Well, at least that's the way I would trade it. So 21,000. Wouldn't want to see below 21,000. You get below that, it invalidates that as a buy setup. No blow off top from here. That was your blow off top. That's all you get. So be careful. This leg down can match this leg, and you get this happening down to there. That'll just stop you out, and then you wait for another entry if it makes a higher high, higher low type of scenario. But there's no. Be careful. Be careful. As you can see, the risk comes on very abruptly. I don't know if anybody's ever seen this chart or anybody charts it, but this is the Magnificent 7 ETF, holding, the best performing stocks basically of the year. I just happened to come across it today. And if any chart looks toppy, it's this one. This is, if you look at the volume profile, how this went up, you can see how the nothing really happens as far as the volume is concerned until you make it to a toppy area. See the volume increased here, and it couldn't push through that. And now lower volume, and it ramped up, and you see how much more volume there is in these few candles that happened over the past few days, and that's absorption. You have a lot of volume in those upper candles up there, and now a reversal. That looks toppy. That looks like sell orders were sitting there and price could not push through all the sell orders, and eventually buyers were exhausted, and now you've closed a lower low. That's probably the toppiest chart that I can come up with. So that does look like a top to go sideways or repeat something like this leg down. Kind of have a sharper pullback to get buyers to step back in and push it back up again and see if you could break. Maybe get some of those sellers to chase the price down a little bit before going back up. So you might have some sideways and down coming for these Magnificent Seven stocks, which would make sense. I mean, Nvidia is one of them, and that hasn't made much progress in the past 6 months. It's just kind of been stagnant, moving up slightly, but not to the extent it was last year. So that kind of speaks to toppiness. Which brings us to our good buddy Bitcoin. That is, on the sell-off, it actually is still closing a higher low ever so slightly, but it is a higher low, higher high, higher low. It's definitely higher than this low, still higher than these lows. But yeah, below 96, a daily candle closure below 96, and I'd say sell the retrace. You're going lower. But from this posture, I'm just matching that leg with this leg coming down and expecting much more upside, especially if this leg repeats here. We could have an explosive rally coming into Donald Trump's inauguration. So I'm wondering what that rally, if it comes, what it's based off of. If it's a problem with the 10-year government bonds or any of the government bonds, bond market collapsing, stock market going sideways and down, uh, devaluing currencies around the world looking to get out of their dying shitcoin fiats, and all the money flows into the United States, gold, Bitcoin, just anything but their own currencies and their own debt. I mean, the Chinese bonds are tanking, or at least they were last week. Yeah, looks like a whole bunch of wheels are falling off of many wagons around the world. And this Bitcoin thing might do what it was engineered to do. So will gold. Gold's been engineered for a long time. It's been what it is. The US dollar is one of the biggest networks in the world. It's where it derives its value from. So you'd probably see the US dollar, Bitcoin, gold rising on the crashing of everything else, unfortunately. And it might be cool to see really, really high targets on your Bitcoin, your gold. But to me, it looks like that is the world falling apart, basically. So the scariest thing you'll see is Bitcoin getting over $200,000, $300,000, because that means some serious things have broken, and things are falling apart. Bad things are likely to come thereafter if this Bitcoin does go up that high. Maybe they mute it and it doesn't get as high as some of the upper targets, uh, but that might be a good thing. Hey, it's something to think about. I mean, maybe this market, this crypto market, makes everybody a bunch of money, but your money's worthless, so you keep your crypto maybe, but then that becomes worthless. We're going into unprecedented times, at least from this generation's standpoint. I think other generations may have lived something similar, but I think we're going to go through a mixture of everything, and yeah, we'll get through it. We'll find a way to get through it. But if you are able to get through it, help everybody around you. I think that's enough of my ramblings. So stop the video here at 25 minutes, another long one. Sorry about that. Just random thoughts and kind of charts painting a picture all together that are saying kind of what we've been saying for a while is the markets are looking discombobulated. Ask questions, keep the conversation going. Yeah, let's keep our minds sharp and watch for the for what the market's telling us here. Have a great night. Keep them stops tight.